Hello and welcome to The Pitch, brought to you by Livewire Markets. I'm Ali Selby, and today we're going to be learning about the potential catalysts and potholes you need to be aware of to be successful in 2025. To do that, we're joined by Bob Desmond from Claremont Global. Thanks so much for joining us today, Bob.
My pleasure, Ali.
The macro has never been more important, or so it seems. It seems fund managers, all that they can talk about is inflation, interest rates, and the US election. You're a high conviction portfolio manager. How important is the macro to your process?
Not very important, Ali. I obviously read papers and I'm interested, and Adam and I might have water cooler chats, but it has no impact at all on our process. And the reason is to consistently get the macro right is very, very difficult to do. The thing I always remind our clients is the Fed is normally right only about a third of the time in terms of its forecast. And you think of all the information that they have, all the firepower they have, they consistently get it wrong. Even if you can consistently get it right, the second derivative is also really difficult because you have to make sure that that information is not in the market. So we pay no attention to macro. I think what we pay a lot of attention to is the quality of what we own and the competitive advantage. And also we pay a lot of attention to valuation, because at the end, your earnings returns will be a function of earnings growth and multiple expansion or compression. So obviously when multiples are high, the probabilities are that at some point they mean revert, and that's going to be a headwind to your long-term returns.
We're less than a week away from a US election. It's been quite a controversial race so far. Are you thinking about that at all, or it's completely out of mind?
I am thinking about it, but not from an investment point of view. But we do think about it where it affects our companies. For example, is this a business that relies a lot on imports? I was reading a company transcript yesterday where, they were asked, well, what's the impact of tariffs on your business? And they said, well, if it had been historical rates of 20 to 25% on the inputs, we can cope with that. We can pass that on to consumers. But if it's 60%, which is some of the Trump proposals, that's going to be a lot more difficult. So we look at it, but purely from a business point of view rather than from a market point of view.
Does that mean you feel that Trump's going to win next week?
I have no idea, honestly. It's so too close to call.
Okay. Are there any other risks that you think investors should be aware of in 2025?
I think probably the key one would be valuation. So what we tend to look at is we look at valuation and psychology. And if you actually look at the moment, valuations are on the fuller side. There's definitely psychology is very, very bullish. Now, we did a podcast actually on Livewire. I think it was back in October 22, somewhere around then. And it was such a contrast to today. That was just 2 years ago. Everyone knew there was going to be a recession. There hasn't been a recession. And valuations were incredibly attractive. You could pick up companies like Microsoft in low 20s multiples. But everyone was waiting for it to get cheaper. Yeah. It never got cheaper. Now everyone's waiting for it to get more expensive. So we don't try and predict the short-term direction. What we look at is the valuation today and what that means for returns over 5 years.
What does it mean for returns over the next 5 years?
I would say from a market point of view, Goldman's have actually got a study out recently. I think they said 3% returns for the next decade. That sounds pretty bleak.
It's a lot lower than the average.
It is a lot lower than the long-term average. What we tend to do is we target a return of 8 to 12%. And that's how we communicate with our clients, and we say, where are we at any one point in time? So we would say where the portfolio sits today, we feel we can get to the middle of that range, maybe slightly to the right. But then that's direct contrast to something like the end of 2021, where we felt it was almost impossible to even get to the left side of that equation. So we look at it in two ways. Where's the market and where's the portfolio? So I would say we feel all other things being equal over the next 3 to 5 years, we can get clients to double-digit returns and reasonably confident of that.
Where do you think we are in terms of investor sentiment? There's quite an interesting chart, which I can find and put up on this video, where it talks about euphoria and fear and everything like that. Where do you think we are today?
We're somewhere close to euphoria, I would say. We are very bullish. Maybe it'll keep going. If you think about it, US holdings of stocks are pretty much all-time highs, similar to what they were at the end of the dot-com era. Stock holdings are high, sentiment's bullish, AI is going to change the world, inflation's coming down. It is a perfect scenario. But for markets to keep going up, you need incremental good news from here. If news starts getting worse, I think that'll put markets under pressure.
I feel like I already know, but what's your outlook for 2025? And are there any key traits that you think will drive quality growth heading into the year ahead?
We don't have like an outlook for a year. We just look at today. I would certainly be very cautious if you're just buying the market, as it were, or if you're buying themes. Those have run quite hard. So I would certainly be on the cautious side. And in that type of scenario, I'm obviously going to say that as a quality manager, favor quality, be really clear around your valuations and what businesses are worth. And then opportunistically, if there is a pullback, lean into that as the valuation gap opens up again.
Okay, well, thank you so much for your time today, Bob.
My pleasure. Thanks, Ali.
If you enjoyed that, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.